Well, what a wild year it's been in regards to real estate and mortgage rates for 2024. If you are a prospective buyer or seller this year and not sure whether this is the market for you to entertain, today I'm going to unpack some data and some research that I've done in a very easy to understand fashion to help you make an eloquent decision on if this is the market for you. My name is Beny Rabuchin. I'm with Movement Mortgage. I'm a 20-year veteran in the mortgage market, understanding real estate and mortgage. I'm going to pass some of that knowledge off to you. This is your June 2024 real estate and mortgage market update. Now, what happened this week was very pivotal in where we are. So now that we are halfway through the year, there was a much anticipated meeting this week, and that was the Federal Reserve. Now, just to back up a little bit, many of us in our world have been watching what the Federal Reserve is going to do this year. Now, if I backtrack a little bit, if you watch some of my previous month's market updates, in January, many were predicting that the Federal Reserve was going to start to cut the federal funds rate. Now, let me just be clear, the federal funds rate does not have a direct impact on mortgage rates. It's indirectly tied. However, based on some certain factors that I'll touch on in a second, we are waiting for the Fed to start dropping rates. We're 6 months through the year. By now, many predicted in January, we may have already seen 2 cuts and they haven't done it yet. So I'm gonna unpack what the rhetoric was of that meeting this week and what their forecast is, and more importantly, how that's gonna impact real estate and mortgage rates coming down, okay? So I pulled up a couple articles that you're gonna start to see. Now, there's 2 main factors that the Fed is looking at right now in regards to making their decision on lowering the federal funds rate. And those 2 things are inflation and the jobs market. Now, for inflation, during the pandemic, we saw that get to record level highs, close to 8%, where now it's been coming down. So the Federal Reserve is doing all they can to lower inflation. They've been achieving that. But what's happened in the past few months is we've seen a little bit of a plateau. It was a real deep line going down, then it's plateaued for the last few months. That's why we haven't seen a big move to interest rates since about February. Now, why is that? So inflation, we've seen some good and bad news come out in regards to inflation. In fact, a couple months ago, we saw it tick up a little bit. Now, but here's the good thing. Some news reports came out recently in regards to inflation. It's called your Consumer Price Index. This is what the Fed follows, or one of the sources they follow to gauge inflation, and it showed signs of it coming down a little bit. Now, not a lot. However, the markets reacted favorably this month, seeing that inflation is coming down a little bit. So we've seen a little bit of rally to interest rates. Now, the other really big thing that they're watching, many might have different opinions to this. I would argue that they're watching the jobs market a little closer than they're watching inflation. The reason for that is, and the reason why interest rates have not dropped in a way that we expected them to do early on in the year, is our job market has been really resilient. Meaning, a jobs report came out a couple weeks ago showing that there's a lot of jobs being created, new job openings, meaning if you were unemployed and you were trying to get a job, that there's opportunity for you out there. Now, I'm not going to get into the politics around this or the source of where all this is coming from, but many believe that it's a skewed report, meaning a big part of these job openings are part-time jobs, not full-time jobs. So we're seeing full-time jobs, a lot of impact. We're starting to see some cracks in the economy when it comes to that. We're starting to see unemployment rise a little bit. But then we come out with this very skewed report showing that there's hundreds of thousands of jobs that are opening. So we're gonna have to keep an eye on that. But you're gonna see some articles like this. And this was in relation to the Fed meeting in June. Now, in January, they felt that June was gonna be a date that they started to cut interest rates, and they did not cut rates this time. So you see articles like this, inflation in the Fed day, a crucial moment for the housing market. You know, based on how the Fed speaks, has a direct impact on what our real estate market does, especially interest rates. This other one here, Fed holds steady. They indicate only 1 cut coming this year. So let me unpack that a little bit. So Jerome Powell's our federal chair. Essentially, he came out and said, we don't have any plans on cutting the rate anytime soon. If anything, so a little glimmer of hope, we might do 1 cut in 2024. No one knows when that's gonna happen. My best guess, meaning if they don't have any signs of doing that anytime soon, is that we might see that in the latter part of 2024, which means we're probably not gonna see a big change to interest rates between now and the end of the year, meaning a dramatic change. So we gotta keep an eye on that. But that glimmer of hope that he gave did react favorably with the markets, which in return, we saw a little dip to interest rates. Now, let me be very clear. This trend of interest rates that we're going to see moving down or up, I believe it's going to go down. I just think it's going to be a lot slower than what many people in my world have promised since January. I think this is going to be probably a 2-year slow drop in interest rates. There's going to be good days and bad days, but I don't see any big spikes dramatically downward unless political unrest or pandemic or something like that were to happen. Barring a kind of a normal economy, even during recessionary periods, I don't see a big drop to interest rates. So let's go into the jobs market a little bit more. So I touched on this a little bit earlier. We did see unemployment rise a little bit, now from 3.9 to 4%. Now 4% is actually considered a normal jobs market. So we're not seeing the pain that the Fed is looking for. However, it's trending in the right way, meaning these cracks in the job market are starting to show. Now, I don't know about you, but I feel like I have a conversation with someone at least once a week who is either struggling to find a job or potentially got laid off. So this is happening right now. The reports that the Fed is looking at are lagging indicators. They're looking at the previous months. So as these months go on and it comes a little bit more of fruition that our job market is not as strong as what they think, this is going to be really good for mortgage rates. So you'll see an article like this. There are cracks in America's ultra strong labor market. And ultra strong is some words that I focus on. You know, the Fed makes it seem like our job market is really strong, but other data reports will show differently. And again, all of this will unravel in itself. It's just not going to happen as fast as we'd like, but we are seeing some signs to the job market that are going to impact our economy. And in return, that kind of pain should cause interest rates to come down a little bit. Now, I want to talk a little bit about opportunity in this market. So again, this is for a buyer or a seller that is considering selling their house and not sure what to do, or a buyer, right? Many buyers that I talk to, and I talk to a lot of buyers, is we're waiting for the market to crash. We're waiting for interest rates to come down. There's an affordability problem. All of these things are relevant topics. Now, I will be very clear on this. There is absolutely an affordability issue going on right now, and the people that are impacted by that are mainly your entry-level buyers, especially in high-cost areas. Now, I help people with loans in several different states. Some of your high-cost areas that I have a lot of focus on, for example, California, real estate is expensive. And to buy a house that is in an expensive market with an interest rate in the 7s yields a payment that is most likely a lot more than what you're paying in rent. So I'm not here to say that this is a market for everyone. It's not. But I will tell you that the opportunity lies for those that are financially in a good position to be able to do this. Now, if you find yourself being pre-approved and knowing that you could get into this market, but you're just waiting for interest rates to drop, I'm going to tell you why that mindset not is setting you up for failure, but you're missing a lot of opportunity right now by not trying to at least get into a home that you like or a market that you like, opposed to waiting for interest rates to drop. Now, many believe that there are 2 million, some people even say 3 million plus buyers that are waiting for interest rates to drop. This is a massive amount of pent up demand that are waiting to get into the market. Now, many believe, and right now we're kind of hovering in the high 6s and low 7s, that at rate get to 6%. Many believe that that's going to be the threshold that all these buyers are going to come back into the market. A 1% drop in interest rate, depending on the price point that you're looking at, has a big impact in your monthly payment. So many believe that they're waiting for that. So I want you to put yourself in the shoes of a buyer that is waiting. Here are the things that they don't understand about solely focusing on interest rates dropping, which I'll tell you that the majority of people that are looking to get into the market or even sell their house and wait for interest rates to drop are so hyper-focused on interest rate, but there's some things that they're not focusing on that are equally as important. So I want to touch on what inventory level is doing. And this is something that's not talked about a lot in my space. And I want to explain what that means. So inventory is the amount of homes that are available in the United States to buy. Now, if we have already a shortage of inventory, meaning we are at extreme lows, and we're already seeing in some capacity, depending on the market, multiple offers, meaning there still are a good amount of buyers in this market right now, even at these temporary elevated interest rates. Now, if we have not a lot of homes for sale, we have more demand than there is supply. Imagine if rates get from 7% to 6%. These 2 million plus buyers are waiting for rates to come down, whether it's an affordability issue or they just want to have a certain payment. They're all going to come flooding back into the market. And what will happen is demand is going to far exceed available homes available for sale for these buyers. So we could see signs that we saw during the pandemic. And just to bring you back to that, interest rates dropped to historical lows. Everyone became a buyer at that point. And we also had low inventory levels at that time. So if you know anyone that bought during that time, it is almost guaranteed that there were multiple buyers going after the same house. I have stories of people competing against 50 other offers on a house. Now, I don't think we're going to see it to that level because what drove that market was the low interest rates, but I do believe that most homes are going to have multiple offers. So put yourself in the shoes of a buyer right now, where many buyers are waiting. Those that are financially ready to make a decision right now and could afford buying a house right now at these temporary interest rates, and you're not competing with a lot of people, it opens up opportunity for a little bit more negotiation. So this inventory level, we are seeing some signs of inventory coming up, right? So I don't know if this is a seasonality thing, because usually in the spring and summer, we start to see inventory pop up. But I want to show you this graph that I saw that goes back to 2008. Many people that I talk to relate this market to the Great Recession in 2008. I want to explain to you why this is a completely different market. So take a look at this chart. So this chart shows, and you can see there in those orange lines, on the left side indicates how many available homes were available for sales. It says single family housing units completed. So this is new construction for homes that they finished. So in early 2000s to about 2006, there were over about 1.6 million homes available for sale, new construction. And then you start to see a huge drop beginning in 2007 down through 2010. And what happened was we went through the Great Recession. We had too much inventory and not enough demand. So the exact opposite of what's happening now, right? Now we have too much demand, not enough inventory. And the reason why we don't have enough inventory, if you can look here, after 2007, you see a huge drop. What happened was builders got scared. During that time, there were foreclosures. They lost these homes to the bank. This was the worst recession in real estate history. And what happened was they stopped building. So for the past 10 years plus, from 2010 now, they've been slowly coming back into the market and building more homes. Meanwhile, our population is growing, demand is growing, especially when interest rates are coming down. So now they're playing catch up over 10 years, and they are just so behind in the amount of homes that are available for sale. Over 1 million home shortage right now. So when you look at this inventory level, are they ever going to catch up? I don't know. With how fast our population is growing and still some hesitancy from builders, it could be 10, 20 years before we're into a more normal market where we have enough inventory to satisfy the demand. So with that said, and what this tells me and that most buyers aren't focusing on is with inventory low and all this demand, we're going to see the prices of homes continuing to rise, right? So this shows you that there is no signs for a crash in the real estate market because all of this demand is soaking up this inventory so quickly, and the amount of demand is going to raise values of homes. Now, during the pandemic, we saw 10, 20, 30% increase in home values. I don't think we're going to see that. I think we see a more normal market in the next couple years, probably 3 to 6%. Some markets, might be plateauing, some are thriving. Now, I want to be clear that when you're looking in a market, and I have this conversation a lot, is Benny, I'm seeing some of these homes with price reductions, meaning I'm watching these houses sit on the market a little bit longer. I'm watching the seller start to reduce their price. I want to be very clear that a reduction in price of what's happening is that seller priced their home more than what the market is willing to trade for, right? A buyer wasn't willing to pay a premium for that home. So this is where I see the opportunity for a buyer, is when you see a seller cutting, it doesn't mean home prices are coming down. It just means that that seller overshot the sale of their house, right? We're in a market right now where they can't shoot for the stars and get whatever they want like we had during the pandemic. So this is where I see a great opportunity for a buyer. This is what we've been waiting for as a buyer. Finally, we can negotiate a little bit. Finally, I'm maybe not paying a premium for this house like we were in the pandemic. So if you're waiting for a perfect time to buy, that's almost impossible to time. However, again, if financially you can make sense of these temporary higher rates and you can get in and negotiate a deal, and I'll talk about some of the great opportunities our buyers are seeing right now, this could be a fantastic fantastic window of opportunity before all this demand comes back into the market. Now, here's another article that I wanted to show you guys. The link is in the description if you want to read it for yourself. I'm just going to touch on very high level, and it talks about the forecast of home values. Now, home prices nationwide, included distressed sales, are increased year over year by 5.3% in April 2024 compared to April 2023. Increase 5%. So the same house you're looking at now is worth 5% more. Now, this is on a national average. Some areas are 10%, some areas are maybe only 1%, but on national average, 1%. So imagine when rates were at 8% and 7%, and you're thinking, oh my gosh, there's no way, the market's gonna crash, no one can afford that. This goes to show you right now, in this data, home values are still increasing at these higher interest rates. So again, when rates get to 6%, and they're already increasing at 5% a year at 7% interest rates, at a 6% interest rate, or a 5.5%, or even 5% that we may get to, what do you think that's gonna mean to home values? They're gonna continue to go up. Now, buying a house now at a higher interest rate, this is where a great opportunity could be for you. And here's why. You have the ability to negotiate. So the buyers, our buyers right now that are winning in this market have had their ducks in a row. They're pre-approved. We've helped them create a plan and a strategy. They can make sense of these higher interest rates because we know that as time passes, there is a high likelihood that we're gonna be able to refinance them into a lower interest rate. So they're getting in before the droves of people come back into the market. So here's some of the things that we've seen. We've seen them been able to negotiate price reductions, right? Find a seller whose house has been on the market for 45, 60 days. Come in there and say, wow, these guys are motivated to sell. I'm gonna offer less for the house. And in many cases, they're able to negotiate a lower price. But even better, we're able to go in there. Let's just say the rate is 7%. We're able to go in that seller and say, okay, we'll pay X for your home. However, we want $5, $10, $15,000 from you as the seller. We call this a seller concession where we're giving you a credit. And we use that credit in a variety of ways. A couple ways that we're doing is we're doing it to cover closing costs. So when you buy a home, you have a down payment and you have closing costs. Imagine being able to buy a house and save $8,000, $10,000, $12,000 in closing costs. That's money that you keep in the bank after you buy the house. Or in other ways, we're using that credit to get them a lower interest rate. So if the rate is 7%, we've been able to help some buyers get into rates into the 5s, into the mid 6s, at 6%. So we're able to get in and negotiate these great terms. What will happen is when the market heats up and the demand comes in, this kind of negotiating power is gonna go away. When you're competing with 2, 3, 4, 10 offers on a house, you can't go in there and say, we want to pay less, we want $10,000 credits. The seller's going to say no, because I have another buyer who's willing to pay the price for my house and they're not asking for anything. So our buyers that are absolutely winning right now have understood the strategy, they're getting into the market and they're just watching their home value increase, and we're just waiting for the opportunity to be able to refinance their house into a lower rate, thus saving them a ton of money, and now they're not competing with those droves that are coming back into the market. Let's talk about interest rates as of today. So as of the middle of June in 2024, we're hovering in the high 6s and the low 7s for a 30-year fix. Now, there are several different scenarios that could cause rates to be more than that or even less than that, but just the general average 30-year fix, high 6s, low 7s. So we're about down 1% than where they were in the end of 2023. I'll do these updates every single month. I don't see anything out there that should cause a big drastic change of rates. Remember, I touched on this earlier in the video. I do see a plateau in interest rates, some up and down, but no major movements up and down in the coming months. Okay, so my advice to you, if you're a seller in this market and you're considering selling, now could be an opportune time, because remember, as a seller, it's a great time to sell because there's people that need inventory, right? Buyers are looking for homes, but then you put yourself in, then you're a buyer, right? So you're selling your house, but then you're with these buyers. Now there's not a lot of inventory for you, right? So you need to look at both ends of the spectrum. People that are selling right now, many of them are doing it just because there's a life change. Divorce, relocation, growing family, empty nesters. Those are most of the sellers that we're seeing right now. So if you find yourself in that type of a case, it is integral that you set up your finances for that next leg of this, because when you're a buyer and there's not a lot of homes available for sale for you, you got to have your ducks in a row even before you sell your house. As a buyer, if you think that this is not the market for you and you're one of those that want to wait for interest rates to drop, or conversely, gosh, maybe I can make sense of it right now. The people that are winning right now have a detailed plan and a strategy. They're not just pre-approved, they are pre-approved through underwriting, which means, for example, for our clients, I package this up, we give them a plan, I send it to underwriting, we get a full loan approval before they begin their search. Those are the ones that are winning because they're not in a dire need to buy, but something is gonna come up when you least expect it and we are ready to move on that, and that's how you need to be in order to buy a home that catches your attention, right? Opposed to shopping for open houses, having no idea what you qualify for, having no idea what your comfortability and payment is, finding that house and then scrambling. Those are the people that are missing out in this market right now. So my advice to you is get pre-approved, get your ducks in a row. You have nothing to lose. It's free. Know where you stand. Know what you need to work on if it's something you need to work on. This is going to be a very relevant topic as the months go on, especially as rates come down. So be prepared, and absolutely this is something that we can help you with as well. A link below to set a time with me if you want to discuss where you are financially and talk about what it looks like to get pre-approved. All right, guys, that is my June update. Stay tuned for my following months. Guys, if this is something that you see value in and these updates are helping you as you're deciding whether to get into the real estate market, please comment below. Let me know what you think about some of the information, and absolutely subscribe, and that way you'll be notified every time I come out with some new information. And I'm preparing a ton of new content moving forward. We'll talk to you soon.